So, what do you think happens when a huge global company, one that's making record profits, decides to mess with the tradition its employees absolutely love? Well, it turns out you get a complete factory shutdown. Today, we're going to dive into this massive labor dispute at Daikin's factory in Thailand. And trust me, this story isn't just about the money. It's about loyalty, tradition, and a little bit of gold. Let's break it down.
So, picture this. It's December 4th, negotiations have been failing for weeks, and then Daikin Industries in Thailand does something pretty wild. They announce they're not just dealing with a strike, oh no, they're actually initiating what's called a lockout. They were literally locking their own employees out of the factory. The doors were set to be shut starting December 6th.
So, you might be asking, what in the world is a lockout? It's a great question. Think of it like a reverse strike. Instead of the workers walking off the job, the company actually locks the doors on them. It's a power move, right? The whole goal is to put pressure on the union to cave and accept the company's terms. And here's the kicker, the really crucial part. During a lockout, the workers don't get paid a dime. So yeah, it's a very, very high stakes game.
Okay, so how on earth did it get to this point? I mean, locking out your own workforce is a huge deal. Well, it all started with something that sounds pretty familiar in these disputes, a disagreement over the annual bonus. Let's take a look at what both sides were putting on the table.
All right, so here's the breakdown of where things stood. Daikin came in with an offer of a bonus equal to 5 months' salary plus a special allowance of 12,000 Thai baht and a 2% pay raise on top of that. Now, the union, they were aiming higher, a lot higher. They wanted a 9-month salary bonus, along with that same allowance. You can see the gap right away. That's a difference of 4 whole months of salary in the bonus alone, a pretty significant divide.
So, why was the union pushing so hard for that 9-month bonus?
Well, context is everything here. In 2023, Daikin Thailand reported a profit of 5.9 billion Thai baht. To put that in perspective, that's over 160 million US dollars. From where the workers were standing, the company was having an absolutely fantastic, record-breaking year, and they felt, that they deserved a bigger slice of that pie, especially when they saw that over 5 billion baht had already been paid out to shareholders.
But here's the thing. This whole conflict wasn't just about the numbers on a spreadsheet. It went way deeper than that. There was a much more emotional, personal issue at the heart of this that really threw gasoline on the fire.
You see, for years and years, Daikin had this really special tradition. After an employee had been with the company for 10 years, they were given a gift of gold. And this wasn't just some random perk, it was a huge deal. It was a powerful symbol of loyalty, of appreciation. It was a career milestone that people really, truly looked forward to.
But then, the company decided it wanted to change things up. Their reason? The price of gold on the global market had just skyrocketed. So Daikin came to the table with a few alternatives. They said, look, we could merge the value of the gold into the overall bonus budget, or how about we just give you 40,000 baht in cash instead? They even floated a third option. We might be able to raise the bonus to 7 or 8 months if you guys agree to forget about the gold award altogether.
Wow. You can imagine how that proposal went over. It landed like an absolute bombshell. For so many of the long-term employees, that piece of gold wasn't just about its cash value. It was a promise. So to have it taken away, that wasn't seen as just some business decision. It felt personal. It was seen as a moral insult to their loyalty, a total betrayal of trust after they'd given years of their lives to the company. So now you've got these two major points of conflict, the size of the bonus and the future of the gold award. The two sides were just at a complete impasse. They had multiple rounds of talks, but communication just completely broke down. They were hitting a wall and they were hitting it hard. This timeline really shows you how things went from bad to worse. So it starts back in September with the union putting their demands on the table. Fast forward to late November, after Daikin had already declared an official labor dispute, and you've got workers starting to protest right outside the factory. After more than 10 rounds of talks. 10 rounds. These still couldn't find any common ground. The final attempt on December 4th just completely collapsed, and that led directly to the lockout just 2 days later. The whole thing just unraveled. What's fascinating is that this conflict, which happened at just one factory, really shines a massive spotlight on some much bigger issues. We're talking about huge questions around labor, fairness, and what corporate responsibility even means in our global economy today. When you look at it from both sides, you see two completely different stories taking shape. From the company's perspective, they argued that rising costs, especially the price of gold, basically forced their hand.
They said the lockout was a legal, last-ditch effort after they'd already offered what they saw as reasonable compromises. But then you have the workers. They were pointing to those record profits as proof that the company could absolutely afford their demands, and they saw taking away the gold tradition as a fundamental breach of faith.
And this is exactly why this story matters so much, far beyond the walls of that one factory in Thailand. It makes us ask some really tough questions. What is the right balance between a company's bottom line and fair pay for the people who do the work? How effective are local labor laws when they're put to the test by a global giant? And this is so important. This wasn't just some random one-off event. It actually connects to a wider pattern of labor issues that have been seen in Daikin's supply chain all across Asia.
Which brings us to this final, really powerful question that sits at the very heart of this whole conflict. When a company is having its best year ever, making record profits, but the cost of a long-held promise suddenly goes up, who should pay that price? Is it the company's bottom line? Or is it the workers who have always seen that promise as a symbol of their dedication and loyalty? There's just no easy answer here, and it's a question that's going to keep echoing across global supply chains for a long, long time.